Hello, I'm Simon Edelsten from Goshawk Asset Management, and I thought I'd do a quick update about global equity markets now that the results season for the large companies is pretty well past us. Global equity markets have hit new all-time highs, which have surprised a lot of people given that there's quite a lot of worries in the world. Still a war going on in Iran, very high oil prices, threats to, the cost of living is clearly sharply higher, and that's reflected in bond markets. So bond markets have done rather badly, equity markets have done rather well, which puzzles a number of people. But looking at the equity market at a more detailed level, the run in the equity market has really all been about artificial intelligence stocks, which is the one big boom going on at the moment. And even inside that, the story in the artificial intelligence stocks has been quite specific. So what's happened over the last few weeks seems to us to be the following. OpenAI, which was seen as the clear leader in this space and very much lauded as the sort of masters of the universe here, there was a leak about a few weeks ago. Seems to have been another argument going on there between the senior people. Revenues do not seem to be coming in as they hoped or as they expected. And I think last year it became clear that a lot of people were using Google instead of just sticking with the OpenAI app as their primary place where they were trying to develop their own, this is enterprises, develop their own artificial intelligence applications and agents. And more recently on the enterprise side, Google's more of a consumer-oriented company or a language-oriented company. And then on the enterprise side, for businesses and code writers, people are increasingly using the Anthropic products, Claude and others. So it does seem at the moment, no doubt we'll get much more information about this from OpenAI over time, but it seems as though OpenAI is lacking a bit. Both Anthropic and OpenAI intend to IPO this year. And for those investors like us at Goshawk who don't like to get too carried away by these things and always want a stock that we put money into to show good valuation basis. These stocks are difficult to value because they don't make money. They don't make actual profits. And so you end up relying very much on the revenue line to value the stocks. And then you sort of try to work out how much of those revenues is going to be captured by shareholders in the very long run and do a discounted cash flow calculation based on that. So if you're missing your revenue figures ahead of your IPO, that's quite a trouble. I mean, the valuations here are very, very geared to the revenue line. And for OpenAI, that looks a bit tricky, especially given that their proponents and their bankers are hoping to do an IPO, or have been said to hope to do an IPO around $800 billion. So we're not dealing with trivial money here. And so that valuation will probably come under some level of skepticism when they launch the IPO. On the other hand, Anthropic clearly is winning revenues at the moment. But even here, one has to be a little bit careful. The amount of money you pay for Anthropic time, what are called tokens, is really very much dependent. If you're an enterprise trying to build an AI agent, it depends what you're up to. And at the moment, what everyone's up to is the design phase. So people are spending an awful lot of time on Anthropic Claude designing the kit that they want for the future. Once they've designed it, they'll spend a lot less time on that. And so you could have, even for a company like Anthropic, even though no doubt its revenues will look very impressive in the short term or medium term, there could be a fade after people have built their AI agents and then they need fewer tokens, less time on Anthropic. Or it may be that one needs to spend buckets of time on this forever, in which case one wonders people are going to have to do quite difficult calculations. Is it all worth it? Am I getting enough benefit out of this to replace the workflows and the cost of the workflows I had in my business with the new AI agent? We'll wait and see on that. What the market's concluded here is a fairly classic piece of investment. There's gold in them, their AI hills, The prospectors have hit a bit of gold and they're jumping up and down about it. So what smart investors often do is, as they say, to go and buy the local hardware store so that you're selling all the other prospectors who are going to pile in picks and shovels for when they go off prospecting. And the picks and shovels in AI are semiconductors. So all the semiconductor stocks have gone through the roof because everyone can see that anyone trying to build AI at the moment is going to need more chips than there are available at the moment, both memory chips and processors. The main supplier, the dominant supplier of processors has been Nvidia, but people are now saying that Nvidia will not be able to produce at the right volume, cost or power efficiency enough chips for AI. So other semiconductor stocks have performed extremely well over the last few weeks and months, in fact over the last year. Intel in particular, which we have in the Goshawk funds, has been a star. I'm an absolute star, as has Taiwan Semiconductor, but a range of other stocks, many of which we don't own. So the run in the market is quite narrowly focused in semiconductors. A number of these stocks are extremely large chunks of the index, so the index sort of amplifies the run in semiconductors. But it is a very narrow foundation for a global equity market to hit new highs. Semiconductor stocks are famously cyclical. I remember 25 years ago when I started in fund management, every American fund manager would own lots and lots of Intel and say Intel's going to be the dominant processor company forever. And then it underperformed for 25 years. So you might remember Intel inside and all of us having to buy new PCs to get the new Intel processor, which was more powerful than the one we had 18 months ago. Those days are long gone now. So for long-term investors, this is a slightly shallow basis for the market to have hit these highs. All the same, it's done our funds very well. But the AI story is broader than that. And the other stocks which have done very well for us over the last few months have been our Japanese automation stocks. So companies like Keyence, the world leader in sensors. If you want to make robots, you need Keyence sensors. And also our robot companies like Yaskawa have also gone up. I think both stocks are up more than 30% in the last month alone. And the yen unusually has not gone down during that period, so that's done us a lot of good. So the Goshawk funds also are hitting new all-time highs. But what's pleasing for us is that they've done it on a much broader foundation, because we've had, it's not just semiconductors. It's a broader automation theme that we've got in the portfolio. And furthermore, despite markets hitting new all-time highs, an awful lot of stocks have hardly moved at all over the last few years. And it's still not that difficult to go out there and find stocks miles outside the spotlight, which are perfectly sensible value for money. I mean, okay, a lot less exciting, a lot further away from the boom that's going on, but perfectly good value for money, decent quality companies in an uncertain world. You may know that we bought some oil shares recently because we think oil is not a part of a portfolio that you can do without, particularly if there's a cost of living crisis going on. It's not because we have any particular view about what will happen in Iran. It's just that one wants that inflation hedge, or rising oil price always feeds through to inflation. And one of our jobs as fund managers, equity fund managers, is to protect savings against inflation. So we think it's sensible to have a decent slug of money in the oil sector, long term, not just a trading position around military activity by the current US administration. And then lastly, they were just rock solid companies. We bought some shares recently in AT&T, the biggest phone company in America. That trades on a PE below 10, a yield above 4. It's quite dull, but it's also quite safe. So there are plenty of places to invest our gains. As we slowly take our gains in the artificial intelligence boom, we'll find plenty of other places around the world to invest the money, we think, at sensible valuations for the long term. As ever, if you want any more details, do look at our website, www.goshawkam.com, and do send us any comments. Thank you very much for listening.
The content of this video is provided for information purposes only and is not intended to be an offer or solicitation, nor is it intended to be investment advice. The funds run by Goshawk Asset Management may have positions in any of the stocks discussed, but their inclusion in this video should not be taken as a recommendation. Historical performance information is presented by way of example only, and this video may contain forward-looking information that is not purely historical in nature. There is no representation made that the performance presented will be achieved, and no guarantee that any forecast will come to pass. Reliance upon information in this video is at the sole discretion of the viewer. It is not intended to be relied on in making or refraining from making any specific investments or other decisions. Opinions expressed, whether specifically, in general, or both, on the performance of individual securities and in a wider economic context, represent our view at the time of preparation and are subject to change. We hope that's helpful.